What is it that truly separates the mindset of a wealthy individual from the mindset of a financially average or poor individual? What if I told you there are at least 10 rules that the wealthy live by and use to not only accumulate wealth but keep it, and that practicing these 10 rules in their day-to-day life are primarily what set the wealthy apart from others? In this video, we will delve into the 10 rules the rich live by to gain and retain their wealth, which you can emulate to drastically improve the likelihood that you will attract abundance in your life. To receive all of the great free content we have to offer here at Finance Fitness, be sure to subscribe. Also be sure to stick around until the end of this video as we have a free gift for you. Pay yourself first. One of the fundamental principles of wealth accumulation is paying yourself first. This means allocating a portion of your income towards savings and investments before attending to any other expenses. By prioritizing saving and investing, you ensure that your financial future is secure. Whether it's through a retirement account, a savings account, or investments in stocks or real estate, paying yourself first sets the stage for long-term financial success. Saving at least 10% of your net income from each paycheck, together with the magic of compounding over time, can render truly amazing results. By adopting the practice of paying yourself first, individuals establish a habit of saving and investing regularly, regardless of their expenses or financial obligations. This approach ensures that saving becomes a priority, helping individuals build wealth over time and work towards their financial goals. Moreover, paying yourself first facilitates long-term financial growth by harnessing the power of compounding. By consistently investing or saving a portion of income, individuals allow their money to generate returns or earn interest over time. As these earnings are reinvested, the value of savings or investments compounds, accelerating wealth accumulation and creating a solid financial foundation for the future. Thinking long-term. Thinking long-term is a core principle that distinguishes the mindset of the wealthy when it comes to managing their finances. This rule underscores the importance of having a strategic and forward-looking approach to money management, focusing on long-term goals and outcomes rather than short-term gratification. Individuals who adhere to the principle of thinking long-term prioritize sustainable wealth creation over instant gratification. Instead of making impulsive financial decisions based on immediate desires or market fluctuations, they carefully consider the potential long-term impact of their actions on their financial well-being. One of the key benefits of thinking long-term is the ability to withstand short-term fluctuations and challenges. By maintaining a focus on long-term goals, individuals are less likely to be swayed by temporary setbacks or market volatility. This resilience enables them to stay the course during periods of economic uncertainty and continue working towards their financial objectives with confidence. Moreover, thinking long-term encourages individuals to adopt a holistic perspective on wealth management. Rather than pursuing quick fixes or chasing short-term gains, they prioritize strategies and investments that align with their long-term financial goals, such as retirement planning, wealth preservation, and legacy building. Additionally, thinking long-term fosters a sense of discipline and patience in financial decision-making. Wealthy individuals understand that achieving significant financial goals often requires time, dedication, and consistent effort. They are willing to delay immediate gratification in favor of making strategic investments or sacrifices that will pay off in the long run. Taking calculated risks. Taking calculated risks is a pivotal principle in the financial playbook of the wealthy. It involves the strategic assessment and acceptance of risks in pursuit of financial growth and opportunity. Rather than shying away from uncertainty, wealthy individuals understand that calculated risks can be a powerful tool for wealth creation when approached thoughtfully and strategically. At its core, taking calculated risks involves a thorough evaluation of potential outcomes, weighing the probability of success against the potential downside. This process requires a combination of research, analysis, and intuition to identify opportunities that offer a favorable risk-reward ratio. One of the key benefits of taking calculated risks is the potential for outsized returns and rewards. By venturing into new markets, investments, or ventures, individuals can position themselves to capitalize on opportunities that have the potential to generate significant wealth. While not every risk will result in success, A calculated approach minimizes the potential downside while maximizing the upside potential. Moreover, taking calculated risks cultivates resilience and adaptability in the face of adversity. Wealthy individuals understand that setbacks and failures are an inherent part of the risk-taking process. Instead of being deterred by temporary setbacks, they view them as valuable learning experiences that can inform future decisions and strategies. Diversify your investments. Diversification is a cornerstone of successful investing. Wealthy individuals understand the importance of spreading their investments across different asset classes to reduce risk and maximize returns. At its essence, diversification involves avoiding putting all your eggs in one basket. Instead of concentrating investments in a single asset or sector, wealthy individuals allocate their capital across a diverse portfolio of assets such as stocks, bonds, real estate, commodities, and alternative investments. By doing so, they aim to reduce the impact of volatility in any one investment on the overall performance of their portfolio. One of the primary advantages of diversification is its ability to minimize risk. Different asset classes tend to perform differently under various market conditions. For example, while stocks may experience volatility, bonds may provide stability. By holding a mix of assets with low correlation to each other, investors can cushion their portfolios against downturns in any single market segment. Continual education. The wealthy are committed to lifelong learning, especially when it comes to financial matters. They understand that the world of finance is constantly evolving, and staying informed is essential for making informed decisions. At its core, continuous education involves a commitment to expanding one's knowledge and skills in all aspects of personal finance, investment, and wealth management. This can take various forms, including reading books, attending seminars and workshops, enrolling in courses, and seeking advice from financial professionals. By actively seeking out opportunities to learn and grow, individuals can enhance their financial literacy, make informed decisions, and adapt to changing market conditions. One of the key benefits of continuous education is empowerment. As individuals deepen their understanding of financial concepts and strategies, they gain greater control over their financial lives and are better equipped to make sound decisions that align with their goals and values. This empowerment fosters confidence and independence, enabling individuals to navigate the complexities of personal finance with clarity and conviction. Surround yourself with success. Success breeds success, and wealthy individuals understand the importance of surrounding themselves with like-minded individuals who share their goals and ambitions. At its core, this rule emphasizes the power of association. By surrounding themselves with successful and financially savvy individuals, wealthy individuals gain access to valuable insights, resources, and opportunities that can accelerate their own growth and success. Whether through mentorship, networking, or collaboration, being in the company of achievers fosters a culture of excellence and ambition that propels individuals towards their financial goals. One of the key benefits of surrounding oneself with success is the cultivation of a growth mindset. Success begets success, and being in the presence of accomplished individuals can inspire individuals to raise their own aspirations and strive for greatness. By witnessing the achievements of others, individuals are motivated to push beyond their comfort zones, embrace challenges, and pursue their dreams with determination and resilience. Delay gratification. Delayed gratification is another hallmark of financial success. It involves the ability to resist immediate rewards in favor of larger, long-term gains. Wealthy individuals understand that practicing delayed gratification is essential for building wealth and achieving financial success. At its core, delayed gratification requires individuals to prioritize their long-term goals over short-term desires. Rather than succumbing to impulsive spending or instant gratification, they exercise self-discipline and patience, willing to forgo immediate pleasures in exchange for greater rewards in the future. This mindset shift allows individuals to make strategic decisions that align with their financial objectives and contribute to their long-term financial well-being. Stay disciplined. Discipline is key to achieving financial success. Wealthy individuals understand the importance of sticking to a plan, staying focused on their goals, and avoiding impulsive decisions. Whether it's sticking to a budget, maintaining a consistent savings plan, or sticking to an investment strategy, discipline is essential for achieving long-term financial success. By staying disciplined and staying the course, they can overcome obstacles, navigate challenges, and ultimately achieve their financial goals. At its core, staying disciplined entails adhering to a set of financial principles and behaviors consistently, regardless of external circumstances or temptations. It requires individuals to stay focused on their goals, maintain a budget, and resist the urge to deviate from their financial plan. Whether it's sticking to a savings regimen, adhering to an investment strategy, or avoiding unnecessary expenses, discipline is the cornerstone of effective money management. Adapt to change. Change is inevitable, especially in the world of finance. Wealthy individuals understand that being flexible and adaptable is essential for navigating changing market conditions and economic landscapes. Whether it's adjusting their investment strategy, pivoting their business model, or exploring new opportunities, they embrace change as an opportunity for growth and innovation. By staying nimble and open-minded, they can capitalize on new opportunities and thrive in an ever-changing world. At its core, adapting to change involves a willingness to embrace uncertainty and proactively respond to shifting economic, technological, and market conditions. Wealthy individuals understand that change is inevitable and that those who can adapt quickly and effectively are best positioned to thrive in any environment. Give back. Giving back encapsulates a profound principle that defines the philanthropic mindset of the wealthy. This rule emphasizes the importance of using one's resources, influence, and expertise to make a positive impact on the world and contribute to the well-being of others. Beyond accumulating wealth for personal gain, wealthy individuals recognize their responsibility to give back to their communities and make a meaningful difference in the lives of others. At its core, giving back involves acts of generosity, compassion, and altruism, aimed at addressing social, environmental, and humanitarian challenges. Whether through charitable donations, volunteer work, mentorship, or advocacy, wealthy individuals leverage their resources and platforms to support causes they believe in and create positive change in the world. One of the key benefits of giving back is the fulfillment and sense of purpose it brings. Wealthy individuals understand that true wealth is not measured solely by financial riches, but by the impact they have on others and the legacy they leave behind. By giving back, they experience a deep sense of fulfillment, knowing that they are making a difference in the lives of those less fortunate and leaving a positive mark on the world. As promised, we have a gift to assist you on your path to financial freedom. Here at Finance Fitness, we are committed to helping you build wealth and financial freedom. In order to fast-track your wealth-building mindset, be sure to check the link in the description below for your free copy of the Wealthy Mindset book. To stay on top of all our valuable free wealth-building content, please be sure to like and subscribe. We will see you on the next video.